I have with me Sumeet Jain, who is the senior research analyst, looking at the key industry, which is IT. Sumit, uh, let me begin with you. How was the year for the IT this year?
Yeah, so I would say very high expectations at the beginning of the year from, US economy under the newly elected president. But I guess nobody thought of that his election agenda about tariffs and the new world order will actually pose a lot of headwinds for the technology sector, particularly IT services.
Hmm.
And I think that's what, from February, March, we saw the overall sentiments turning sour because of tariff uncertainty. It started to reflect in the stock prices, and of course, the guidance given by the companies in April was again a very subdued growth guidance, what we could see in the last 2 years as well. So yeah, I think this sector always has very high expectations at the beginning of the year, but it has like continued to disappoint for the last 3 years.
And add to that the AI talk.
Yeah, I think AI, to be very frank, is still very uncertain how things will play out. And we wrote a very detailed deep dive report in March, which we marketed across all the global financial hubs. And then we did extensive 2 days of virtual GenAI access days where we invited 14 experts
Hmm.
across tech stacks to tell, how system integrators will have a key role to play in AI evolution.
Hmm.
And we could sense that, there is obviously uncertainty whether the deflation on revenue will be higher than the volume opportunity or vice versa.
Hmm.
And I think the bottom line to that is cloud as a technology took 15, 20 years to where it is now,
Yeah.
where 35, 40% of workloads are on cloud now. AI, as we talk about, there is a lot of hype, which probably will get implemented in the enterprise tech stack over the next 15, 20 years.
Hmm. Okay.
I mean, if you look at the reported annual revenues from AI of, let's say, Capgemini or Accenture,
Hmm.
now HCL has started reporting
True.
advanced AI
Yeah.
revenue.
Yeah.
It is just 4-5%, right,
Yeah.
of their overall revenue. And it is probably inching up by a couple of percentage points of overall revenue every quarter.
Yeah.
So it will probably reach to 40-50% maybe in next 7-8 years.
Okay.
So which is where I think we have to see the readiness of these companies on AI in terms of the partnership with the key tech ecosystem providers like NVIDIA
Hmm.
on the chip side, the cloud hyperscalers, then with OpenAI, let's say. So we attended the HCL AI lab visit recent couple of weeks back,
Okay.
and they mentioned that they are the only partner with OpenAI currently where they have forward deployed engineers to implement OpenAI LLMs
Hmm.
with the enterprise apps.
Okay.
So these initiatives are happening, and the multiple partnership OpenAI has announced,
Yeah.
the way they are creating the whole ecosystem.
Yeah.
So how these system integrators are involved in infusing Gen AI across tech stacks, whether it be the lowest layer of infra, the middle layer, or the upfront layer in terms of SaaS or applications, that's what we need to look at. And I believe SIs will have a big role to play out there.
You have a difficult task of defending the Indian IT companies because globally everyone's talking about AI and AI investment and valuation, and when they talk about that, they talk this as well, that Indian IT doesn't have an AI play. And you yourself said that it will take at least 6 to 7 years to have that kind of play because it's now 4 to 5% for few companies, which is there. How do you, you know, rate some of the Indian IT companies? Who will be the better one to
Yeah.
lead this entire AI race from Indian services point of view?
Yeah. So actually, there are two ways to look at it. One is, in terms of the bottoms-up groundwork that is required to build Gen AI applications,
Hmm.
where are these companies positioned? And in terms of ground-up work, we have identified 4 or 5 areas where data is obviously the biggest opportunity. So in terms of data lakehouse, data warehouse creation, working with the key data platform providers like, let's say, Databricks, Snowflake, Microsoft Fabric, and then the similar platform by Amazon and Google Cloud. So how are the partnerships established with these players that you need to look at in the data side? Then is the cloud hyperscaler migration and change management, because some of the companies can directly procure NVIDIA GPUs and upgrade their infrastructure stack, while some of them have no choice but to migrate their applications to cloud to have access to the GPU computing. So cloud migration capabilities are extremely important. Then the third area is the cybersecurity. We have heard multiple initiatives taken in that area. Then the next area is the SaaS integration, where all the SaaS companies like SAP, Salesforce, they have all come out with their AI agents. And they need system integrators to roll out these AI agents to their end customers. So how closely are you working with these SaaS companies? That will have a big role to play in the agentic AI launched by these SaaS companies.
Okay.
And then of course the RPA and automation. Because ultimately if you talk about AI agents, it's a combination of a LLM, which is your brain and the reasoning model, and an RPA, which actually takes the decision based upon the result thrown by the LLM.
So how do you stack many of the Indian companies there?
So TCS in the large cap space was coming out on top in this whole analysis, where we could see that in all the 4 or 5 areas, except for SaaS integration, they have done phenomenally well. Infosys apparently has the best capabilities on the SaaS integration side, and HCL on the cloud migration side, where historically they were very strong on the IMS side, if you remember. And then in the mid-cap space, Persistent is clearly coming out on top with great set of certifications across all these platforms.
And how do you, while we have spoken about revenue deflation, which is coming into play here because of AI, how do you also look at how are these companies compensating for this revenue deflation which is coming in? Is it newer areas they're getting into? Do they have that opportunity or scalability?
So definitely. So I think the 4 or 5 areas I talked about, right, which are the required to build the ground up for your GenAI application. This is the new volume of work they are getting in the GenAI world. So on one side you have the revenue deflation, where I guess the numbers are all in the year around 20 to 40% productivity improvement across coding, app services or IMS. But actually if you talk to the practitioners on ground, they are not seeing more than 5% productivity in the real world.
Okay.
Reason being, when you take this overall software development lifecycle SDLC, only 10 to 30% of the work is around coding, which is getting automated because of GenAI.
Okay.
But rest of the work in terms of understanding the enterprise workflows, the overall processes, where you need the domain expertise, that is still very much required. So, which is where the new volume of work is quite humongous. Now it's all about who has the first mover advantage. And that's where they need to be proactive on announcing these partnerships and start launching client-specific solutions. So I believe AI narrative will keep changing, where 70 to 80% of the valuation of the sector will be driven by macro.
Okay.
And that's where, for the next 12-month perspective, we are quite positive on the sector.
It's interesting that you're still positive on the sector when the sector itself has underperformed for many against many other sectors. But if I were to ask you, please list down what are the things that will change for the IT. So far we have looked at manpower addition, utilization rates, then you have pricing power, volume growth. These are some of the things that we look at on a traditional basis, on a quarter-to-quarter basis for IT companies. That will shift in the next couple of quarters or years. What will be those metrics now?
So I think, see, revenue per employee is the most important metric for me to understand how quickly they are adopting these AI agents or GenAI solutions. Because eventually the industry is shifting away from headcount-driven model.
Yes.
It's more of technology arbitrage rather than labor cost arbitrage. And if you are using more of AI agents in your delivery solutions along with human oversight, which is extremely important, by the way, because, and that's where we are positive on IT services, because you still need a lot of plumbers to stitch the complex technology stack, because AI inherently is probabilistic in nature. It is not deterministic. And in the enterprise outcomes, you need to have a defined outcome every single time. And that is why, this revenue per employee metric is extremely important. So, and I think a lot of companies have talked about on that front. The other thing is more shift from time and material to fixed price or outcome-based projects, where the onus of the success of the project is on the SI. And depending upon the success, they get the proportionate risk and reward. So it's more like a consulting-led kind of engagement, which is what Coforge has done phenomenally well under Sudhir Singh in the last 7-8 years. And obviously it is reflected in the shareholder value creation in that stock.
Another stock which has been good is Persistent in the way they have been able to scale up the product delivery as well.
Yeah, so I think Persistent has a very unique positioning where I would say the roots of the company were like they always wanted to go into the high-end coding work around product platform engineering.
Yeah.
So the data platforms or the cloud or hyperscaler software platforms we are seeing, they have been actively involved in building those platforms. So it is not the regular IT services work that they do, but a very high-end coding work. And that was reflective in our AI capability framework, we created, where Persistent was coming out on top among the mid-cap cohorts.
How do you look at some of the other aspects of the company? You have a Cognizant which is started being very aggressive in this market, not just in the way it's portraying, but also in numbers which is there. Do you think that IT companies are lacking that aggression?
Yeah, I guess the CEOs who are pretty vocal out there around their initiatives on AI, trying to pull out or push more client stories, what they are doing to help out their clients to adopt GenAI, and then reflecting that in their partnership with the ecosystem providers, and then showing it in the order book. And because order book is what translate to revenues and then profits. So this, I think, is the whole chain that we need to look at carefully, where I would say the company management aggression and strategy are the starting point. And that's where we could see that under Ravi, Cognizant has done phenomenally well in the last 2-3 years. And wherever you see a similar aggression in the management and this whole cycle, those companies are doing really well to create shareholder wealth.
Is there a pricing pressure in the industry? Because if you look at some of the players like a Wipro or an Infosys, they have a different commentary on pricing.
Yeah. No, I think that's very interesting point. I think you took up, and even we were surprised to see a very contradictory commentary on pricing between Wipro and Infosys. And it could be because Wipro is competing more aggressively in the cost optimization or vendor consolidation deals, where pricing is always a card that you play. But probably Infosys is having a more stable approach. Historically, their exposure to discretionary demand has been much higher. So they probably are having some more discipline, where through Project Maximus, they're actually trying to increase the rate card per employee and actually seeing a stable to a slight increase in pricing. So they were actually mentioning us that because of AI, they are seeing improvement in pricing, improvement in volume growth, and improvement in margins. So I think the whole negative narrative around AI, what has been spoken in the market for the last 9 to 12 months, it's actually not there in the numbers, to be very frank.
Yeah, and the numbers were surprising for many of the companies, or it wasn't disappointing, let me put it this way, because the expectation was very low for them.
Yeah, so I think, and the other way to look at is, of course, I think the 2Q results was a surprise.
Yeah.
There was an earnings upgrade for all the companies. There were beat on revenues, EBIT margins and profits. But for me, the bigger thing to look at is if Gen AI would have been a big headwind to this sector, why would have order book growing at 25% YOI? Why would BFSI as a vertical growing at high single to low double digits? And that's a vertical which is actually seeing a lot of macro tailwinds, particularly in US, because of easing out on regulatory concerns or interest rate cuts and overall stable economy. So, and Gen AI as a horizontal solution is being applied across sectors, which means that it's more of macro rather than Gen AI at this stage.
When you speak to your investors, which are institutional and global in nature, and when you pitch Indian IT to them, what is the first question they're asking?
Yeah, obviously, I think growth has always been the biggest concern. That if this sector is a mid-single-digit growth potential in dollar terms, and we obviously have the cloud hyperscalers growing at mid-teens, the NVIDIAs of the world growing at 20-25%, then the valuation gap between the Nifty IT and these global integrated tech players is like 20 to 30% in terms
Yeah.
of PE
Yeah.
multiples. But if you look at the PEG multiples, Indian IT is trading at probably 3 to 4 times PEG in dollar terms, whereas the global integrated tech are probably at 2 times. So obviously on the PEG multiple basis, they consider valuation not to be attractive. And that's where, if you look at the shareholding of all the large Indian IT stocks, you will find among the top 10, most of them are domestic holders.
Yeah.
So I think clearly in dollar terms, the returns are not that great.
And also they're underweight in IT basically.
They have been underweight on IT, I would say, since maybe March, April. But I would say that's where, the positioning is light for them. And that's where we believe if the US macroeconomic tailwinds are there in the next year going into the midterm elections with tariff certainty largely.
If tariff comes in, IT is a big outperformer for that.
From the earnings standpoint, there will be no impact to.
But sentiment-wise.
But sentiment-wise, yes. And we could see, right, when the H1B news came around hike in visa fees, the sector did correct by 10%, close to 10%. And once, President Trump's comment came that they actually need people on H1B visas to maintain the continuity of talent in the country, the sector sentiments revived, the sector revived by around 5-10%. So sentimentally, the India-US trade deal would definitely be positive.
This one sector which was in demand in last couple of quarters or last 2 years, which is the ER&D. What's happening there? Your smile gives away everything.
No, actually, I think I have been now covering this space for the last decade almost. And I have been obviously tracking the ER&D companies very closely, listening to all their earnings calls, attending their analyst meets. But somehow I really struggle to justify their valuations for the kind of growth potential or the kind of growth they are delivering. And I guess the whole narrative around those valuation in the market is that these companies can grow much higher than the IT service companies for a much longer period of time because the penetration rates, the outsourcing penetration is still very, very low. So out of 1.8 to 2 trillion dollar of global R&D spend, probably only $150 billion is outsourced. So that's just mid to high single digits. Whereas in IT services, 65 to 70% is outsourced. But then I guess people fail to understand that R&D is a core function of any enterprise and they will not outsource it easily. That is their bread and butter. Plus, if you look at the mushrooming of captives in India, majority of them are in the ER&D space because they want to have that control internally on those operations. And then, the biggest proof of the pudding lies in the form of the ER&D vertical growth of HCL. They are the largest player in India in
and
the ER&D
that
segment.
hasn't grown much in this.
Exactly. If, the penetration story is the key argument, then that vertical should have grown in good double digits consistently. But again, that is a highly discretionary in nature, ER&D. During a weak macro, there are a lot of cuts on the ER&D spends. And that's where I believe the valuation multiples for all the ER&D companies is very difficult to justify.
I just wanted to conclude, when you look at the Indian IT companies and you look at the managements, which are the managements which you think are more aggressive and in pushing the Indian IT story across? And it is not just from the performance point of view, but also the narrative point of view, right? Because the investors, it's all about the narrative which is getting played out here. So how do you see the management?
So I have seen in the large cap space, HCL and Tech Mahindra. I guess
aren't you giving too much of a long rope for Tech Mahindra? 28 is what
I think you will have to look at what vision have they given to the street back in April 25. And of course, that was like a 2 to 3 year vision they shared. And what has been the improvement on various operating parameters. And if you look at the various operating parameters in terms of order booking, their last 12-month order book is up some 45% YOY. And based on our correlation analysis between order book growth and the revenue growth,
Hmm.
they can deliver a high single digit kind of a growth next year,
Hmm.
which can definitely be higher than peer
Will
average.
they meet the guidance?
I mean, which can be higher than peer average, right?
Okay.
I mean, we don't know where peers will end up.
Yeah.
We are assuming like a 5 to 7% kind of a growth for the sector next
Yeah.
year.
Yeah.
So TechM,
5 to 7 is a very good growth compared to what FY26 is looking.
of course, I mean, and that is one of the reasons why we are positive on the space, because we still believe it's a mid single digit growth potential sector.
Yeah.
Because I mean, if the tech spending is growing in that range, then even IT services spend are growing in that range largely, and Indian IT companies are not losing market share, if not gaining.
Hmm.
So in terms of your question, yes, Tech Mahindra is one where they are proactively signing a lot of deals. They give disclosures around must-have accounts, how many have they added, and what is the penetration level they have reached in terms of annualized revenue with those accounts. Similarly, they have the operating parameters around margins in terms of subcontracting cost,
Hmm.
offshoring effort, employee utilization.
Hmm.
All of them are improving.
Hmm.
And of course, I mean, Mohit Joshi's credentials are fairly established, and that's where Street, including us,
Hmm.
have confidence in the vision they have given.
Hmm.
And of course, I think Mahindra is having an analyst day, day after
Yeah.
tomorrow.
Yeah.
So they will share more details. And that's where I believe constant dialogue with your shareholders is extremely important. And that's where I think the Tech Mahindra management is doing a good job. Other companies, HCL, even they are very proactively trying to infuse AI internally within HCL as well as in their client environment, where we recently visited their AI lab a couple of weeks back in their headquarters in NCR, and there we could see that they have launched their AI agents, and they claim that they are 6 to 9 months ahead of the market. Plus, they are the only SI to actually announce a partnership with OpenAI.
Hmm.
So OpenAI has rolled out an army of forward deployed engineers of its own,
Hmm.
and HCL on top of it have trained their own employees around this OpenAI technology, and probably they have got the highest number of badges for
Okay.
their employees in terms of certifications.
Hmm.
And HCL also, in terms of board and sales team alignment, it's a very interesting thing that they are not penalizing their sales team
Hmm.
to proactively infuse AI, which may lead to deflation in your deal values, because eventually your sales team's incentives are linked to
Yeah.
the deal value.
Yeah.
So they are not penalizing them if you are proactively infusing AI. So that shows, that the initial pain that you might have to take, companies are willing to take that upfront. So I think these two companies in the large cap space, I would clearly say, are showing the signs of aggression. And in the mid cap space, clearly Persistent and Coforge are doing well.
Thank you very much, Sumit, for joining us
My
and
pleasure.
giving us a perspective on the IT sector. Thank you.
My pleasure. Thanks for having me.
Thank you.